Grant Lewis is Head of Research at Daiwa Capital Markets, and he joins me from the company's offices in London. Grant, thanks for joining us.
Good afternoon.
If we look at one of the biggest challenges that Europe has, is simply the number of people who are involved in any possible solution, each with their own agenda and their politics. Is that what you mean by total policy paralysis?
I think that's a large part of it. You obviously have 17 individual countries involved, and you have other actors. You have the ECB notably amongst those within those 17 countries. A lot of those are coalition governments, so you have other political parties all acting in their own interest, and to try and coalesce into a single policy framework that's effective and is credible and the market buys it is proving immensely difficult.
And does that mean, therefore, that there simply cannot be a solution?
There can be a solution. I think we could think of a couple of endpoints that we could get to that would deliver the sort of credible response that the market is after. But at the moment, there does seem to be a fracture line down the middle of the euro area in a way where, on the one side, you have people calling for more effort for the ECB, and the ECB and the German government and the Bundesbank very vocally saying that the ECB shouldn't be playing a much bigger role.
You say there are a couple of solutions that you can see that would make the markets happy. Is that ECB intervention one of them?
I think that would make the markets happy initially, for sure. Unlimited ECB buying, if the ECB was to set a yield threshold, a target for Italy, Spain, perhaps some others, then the market would find that credible because the ECB ultimately has infinite resources. I don't think that's necessarily the long-term solution. You know, some of the things that the German government worries about, some of the things that the ECB worries about in terms of longer-term inflation issues about credibility within the euro area would remain. And I think the market would like the ECB to come in, but I'm not sure it is the long-term solution.
Now, we've seen before that when the eurozone gets right to the edge of the precipice, they are able to come together and make at least some kind of move that perhaps kicks the can down the road. But this time around, Merkel and Sarkozy in the past month or so have both alluded to the possibility of a Greek exit from the euro, and that was unthinkable just a few months ago. Do you now think that that is likely to be one of the solutions, that Greece, or maybe Greece and others, would leave the euro area?
Well, unthinkable, yes, that Greece would have left, and it's incredible that we're even having this conversation in a way. 6 months ago, I don't think anyone would have expected to. Whether that's the solution, I'm not entirely certain, because a breakup of the euro, you're now talking about Spain, you're not now talking about Italy, you're saying spreads on France at 200 basis points today, you're seeing spreads on Belgium. That's not periphery, that's core. You're talking about something that's going right to the heart of the euro area, so I don't think the solution is a breakup. And for all the issues that would cause about legal issues and all of the rest that no doubt we don't have time to go into now.
So if ECB intervention isn't the way forward and a breakup isn't the way forward, is there a way that you can see that they can stay together, not of ECB intervention of unlimited buying, and still survive?
Yes, I think the obvious solution is a Eurobond. I think what the market is after now is some sort of joint and several guarantee offered by all member states, but by all member states we essentially mean Germany guaranteeing the debt of other countries. Now, clearly, that's not a step that the Germans have been willing to make so far. But, when you look at the euro area's aggregate debt position, it's better than that of the United States. This isn't a debt crisis for the euro area as a whole. It's a debt crisis in Greece and a credibility and a liquidity crisis, I would argue, in Italy and definitely in Spain. So some sort of move to closer fiscal union that was credible, that the markets believed, some sort of guarantee on those countries that are being attacked debt would solve this crisis.
And Grant, just briefly, do you believe that Germany, if the alternative was a breakup of the eurozone, would finally plump for euro bonds, despite saying for so long that they didn't want to do that?
I think I do still. I think we have to hope that that is what they would plump for eventually, and hopefully this is a bit of a game of chicken that we're seeing being played out. But
Okay,
thank you.
Grant Lewis, thank you very much indeed for joining us.
Thank you.